The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good morning from TFNN. Welcome to the August 9th, terrific Tuesday edition of the Trade What You See show without Larry Pesavento. I'm Steve Rhodes, filling in for Larry for the morning. Hope you're all off to a great start of your day. Let's make sure we have an extraordinary day. You know, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the futures markets are communicating to you and I at just past 9 o'clock in the morning. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow futures. They're trading up 25 points. S&P up 2.5. NASDAQ futures up 7.5. Russell 2000 just slightly above zero, up about a point. To the downside, you've got gold trading off $2, silver down 13 cents. Light sweet crude pretty much even. It's up 7 pennies, trading out at 43.09. Natural gas back a nickel this morning. Let's take a quick peek around the globe, see what happened over in Asia last night. We had the Shanghai up 22 points, about 0.7%. We had the Hang Seng down 29 points, a little over 0.1%, so no big deal to the downside. The Nikkei up 114 points, about 0.7% that way as well. Now, in Germany, you've got the DAX up a full percentage point. So our markets, we didn't really hand the ball off yesterday. A little kind of a sideways, doji-ish style market that we had. Asia, you know, a little bit of a handoff there. So the DAX is in full celebratory mode out there. The FTSE as well, it's up 23 points, about 0.3%. Now, I used to do this show for a couple of years out here, and the real benefit, used to do the 9 to 11 o'clock show. Many of you know that. The real benefit of doing the 9 a.m. show was it forced me to become a even better pattern recognition master, expert, whatever it is you want to call it, because the futures market, because this is all about price discovery and patterns, about trading what it is that you see, the futures market gives us so much information. Now, there are days when the information that it gives us is somewhat neutral. We're going to go take a look at today's information, see if we can make hay out of it. And the first place that we're going to start, intraday. So we're going to take a look at many different time frames. So just please do me a favor while I'm going through charts out here. The most important thing that you can do in life is always be present, right? When you're driving to work, think about work and work. Don't think about driving home. When you're driving home, don't think about work. It's always being present. When you are trading, if you are trading based on signals in a 30-minute chart, be aware of what's above and what's below, but stay focused on the 30-minute chart. When you're trading a daily chart or making daily type time frame decisions, stay focused on the daily time frame, monthly, weekly, and the whole. But if you do that, life is going to work out just grand. Now, speaking of grand, I don't even know what speaking of grand means, but we're going to go take a look at the NQ. We're going to take a look at the 30-minute charts out here, because yesterday morning, if you were a subscriber to my newsletter service, which, by the way, it's very easy to do right now, we've got that available that first month for $49, and it's including the workshop that I'm going to be doing tomorrow night. So that is very simple. But if you were a subscriber to my newsletter service, yesterday you knew that as you were coming into the office, as you were getting my newsletter about 8 o'clock in the morning, sometimes it's a little bit early, sometimes just a tad later, but what you know is what the markets are doing right then and there. So it has nothing, we don't really care. Yesterday, what it did at the close, yesterday's news is old news out here. We're really not that interested in yesterday's news. We're interested in being present with regard to what the market is doing. What the market was doing yesterday at about 5 o'clock in the morning, it was moving higher, doing it with less relative strength. Is that a problem? No. By moving higher with less relative strength, it's not a problem. It's only a problem when the sellers show up. And when the sellers show up, they do not disguise themselves. You see, buyers and sellers have but one function, and that function is to paint candlestick signals for us. And that's why you want to learn the language of Japanese candlesticks out here. The message that the markets gave to you and I was really at 5:30. At 5:30, markets create this nice little dark cloud cover. What's a dark cloud cover? Hey, if you live in Florida, it's like turning on the weather forecast, and most of the time they're going to give you a forecast. Like over the weekend, I said, hey, 30% chance of rain. I walked outside shortly after that. It was raining. Really? I looked to me like it was 100% chance of rain out there. But a dark cloud cover, not the most bearish of candlesticks out there, but still a reversal signal. And we had follow through that very next session. Plus, price drop below Stevie's red line. If you're not familiar with my red line out here, you should be. You want to be, because it tells you when the market has changing directions. And that's exactly what it did yesterday at 6. So, newsletter subscribers, I said, hey, with regard to the intraday, we're going to see some price pressure on the markets. I gave some targets for where price would pull back to find some support out here. And voila, price did find some support yesterday down around, this is the NQ, by the way, down in that 47, 60-ish type range out here. So, moves lower. Now, where are we at today? There was no pattern on the way down, other than price just simply coming back into the area where it broke out. Candlesticks are very important. Japanese or otherwise, they're very important. Wide-ranging bars are nothing to ignore out here, and all that price was doing was pulling back into a breakout area. What does a wide-ranging bar mean? A wide-ranging bar is a breakout or a breakdown area. Depends if it's to the upside or the downside. That is the same as a gap, except gaps are stronger than wide-ranging bars. They're both really strong out there, but do not fear the gap. The gap is your friend out there. It gives you really nice levels of support and resistance out here. So prices move lower, had that nice little price relative strength at the top. This is the NQ, and all the 30-minute charts were doing it. They didn't all do it at the same time, but all of them eventually did it during the day. I'm just trying to widen this out for you. I'm going to try one more time. There we go. Maybe a little bit easier for you to see on Tiger TV. There's no A to B equals CD to the upside pattern out here. So there's no pattern. The only thing that we can maybe take a look at is a little bit of a Chapman Wave count. We're only really in wave 3 to the upside, and we are above market profiles. We're above Stevie's red line, so this suggests that price moves to higher levels. Now, every one of you that listens in to Larry's shows knows that he pays attention to the 0.618 retracement level. So let's make sure that we pay attention to that as well. Why? Because that's often that, well, first of all, it is often the times where people will get off of an elevator. Traders that may have bought yesterday's bottom for whatever reason, whatever oops, didn't mean to do that, for whatever reason, would note, if you are a technical trader, would know when price gets to that 0.618 level. And it is just like hopping on, going into a store, going on up and down an elevator, and you're going to see people are going to get off in our market case out here, depending on the time frame chart you're looking at. People are going to either get off at the 0.382 level. That's your first retracement area, which in fact is what occurred yesterday. We saw price move higher into about 330. 2:30, let's see, 3:30 in the afternoon, and then prices really kind of hovered around that 0.382 retracement. In fact, they hovered around there until about 4:30 this morning, and then things moved to the upside. I think I was listening. I don't get a chance to listen in on the morning shows that often. I was listening to John Logan. What a talented, extraordinary individual out here. And I think I heard him say something about on his TAS market profiles out there that at about 4 o'clock in the morning that he got a nice little bullish message out there, taking a look at what's going on with regard to individual stocks. So we're at that 0.618 tipping level, 47.87. Is this where price ends on the move up? I don't think so. I think we're looking at 47.93. Maybe a move of a move. Steve Rhodes with TFNN. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to the Larry Pesavento Trade What You See show. Steve Rhodes here, filling in for Larry for the morning. Of course, you can always catch on my show as well from 1 to 2 in the afternoon. You can catch it archived on Tiger TV on Channel 9. Of course, you can download it to iTunes and, hear all kinds of great tools, as well as the direction of the market, where things are headed to on your different time frames, because we're going to take a look at multiple time frames out here. Now, we were looking at a 30-minute chart inside the NQ. We could go take a look at the ES, the Dow futures, but they were all eventually doing the same thing. So taking out yesterday's highs would be very bullish for the market. Now, here's the daily chart here for the NQ. And I'm sure John covered this, but we're going to go ahead and take a look at it with a couple of other tools to get a feel for where the market is headed to. A nice bullish breakout candle session. This was on Friday. Now, on Friday, if you take a look at the candle session, the important candle here on August 2nd is August 2nd, a nice bearish engulfing candle. You see, as I say, buyers and sellers have but one role, and that is to paint a candlestick signal to us, and they help us identify lines of support and resistance. Now, it's most important to understand when and where these candlesticks fall. And that's what I'll be covering during the workshop tomorrow evening. In 1 hour, you will, if you have any interest, I mean a smidgen of an interest in Japanese candlestick charting, then this is the class you want to go to so that you can just cut through all of the minutia and just focus on what it is that you need to know. Now, with regard to a natural line of support and resistance out here, one was formed on the trading session of August 2nd. Now, the high of August 2nd, by the way, was 47.59.50, and the high of the prior session was 47.60.25. Which of those two is resistance or support now in this case? It's the higher of the two. Right? It's not necessarily the actual bearish engulfing candle. So what we know right now is a level for us to be paying attention to, this is both bulls and bears, is 47.60.25. The implications are that if price were to close, not test, but close below that, that would be a problem. Now, the nice thing here is we put together our arsenal of tools. We've got our TAS market profile, that high out there from the daily charts, which is at 47.47. So are we going to worry about 47.47 versus 47.60? No, because we've got this nice double gui set of tools out here. So any price move below 47.47 or close, not price move, but a close below, says now you're looking at 47.07, maybe even 46.41. No problems there, just simply short-term potential retracement of a huge move to the upside off of that June 27th low out there. That's what's going on a daily basis. I'll give you another number to focus on. So we've got really three numbers that really help us to understand whether or not there's going to be some kind of retracement, some type of reversal. And that's 47.69.39. That is Stevie's red line. If you pay attention to Stevie's red line, this will assist you in so many different ways. It helps us to identify. You're looking at the daily chart, by the way, of the NQ out here. We can see that price was moving higher, doing less relative energy, forming a seventh wave out here on April the 19th. That was a beautiful thing. Of course, we had that big, huge Gartley buy pattern that formed. I'm sure Larry filled you in on that on June 27th. June 28th was really when we got that signal, that confirmation of that Gartley buy. And now what we have going on here is very likely the A to B equals CD to the upside. You may say, what the heck does that look like? Well, it's pretty simple. The A point down here on February 11th, the B point at that wave 7, your C point down here on the trading session of June 27th. You say, where is it that the NQ is headed to, Steve-O? Unless it takes out those support levels, all messages here are the NQ is headed to 48.9875. That's if you believe in the A to B equals CD patterns, because we're going to trade what we see. This is what we see, is it not? It is a valid, it is not just valid, it is a Gartley buy. It is a textbook Gartley buy pattern that gave us that signal right here on the trading session of June 28th. Can the market do something else? It can. I cannot control what the market does, nor can you. But what we can do is we can trade what we see. We can trade and we can read the message of the markets. Now, speaking of A to B equals CDs, I saw earlier, happened to leave my den feed on all night long, and happened to see that Larry had posted a chart. So I'm sure that he wants me to share this with you, or somebody to share this with you. So why don't I do that? Because he posted a long-term A to B equals CD chart. It looks something like this. This is for the S&P 500. Well, this is an annual chart, by the way, of the S&P 500. So that's what he posted. I figured, hey, I should just post the same so everybody gets to see it. This is what he posted. Here is the long term, which he identified. I believe it was a 40-year, right? It goes back to 1974. So off of the low inside the S&P 500 is 62.28. That becomes your A point. Your B point out here is the year of 2007. That makes sense, right? 1576.09. Makes a retracement of about 60% down into the March of 09 level. And now, voila, today, the reading, by the way, is 2180.60. That would be your fulfillment of your 1-to-1 A to B equals CD. The S&P closed yesterday at 2180.89. Now, here's the question that I will pose to you. Do you sell every D point of an A to B equals CD to the upside? Do you buy every 1-to-1 is really what I should have said. How about 1-to-1 A to B equals CD to the downside? Do you buy those? Do you sell the ones that are 1-to-1 to the upside? Go ahead and take out a quarter and flip a coin. Flip it 10 times. How many times do you think it'll be heads? How many times do you think it'll be tails? They say in theory it ought to be 50-50, but you know better than that. It doesn't always work out that over a case of 10 periods. Maybe it's going to be 60-40 or 50-50 out there. And if you do that right now and you were just to buy or sell every 1-to-1, you're flipping a coin. You want the market to communicate to you what it's going to do. And it does that through one way. It does that by generating bullish and bearish reversal signals. Now, this move here from 1974 to 2007, look at how long that move took. And now look at the explosion, and I do mean explosion, off of the March of 2009 levels. Take a look at where price is traveling in time versus from 1974 forward. What do you think the chances are? Because, by the way, a 1-to-1 only occurs 60% of the time. And I can't even verify that percentage out there. But it's pretty close. Maybe it's 57, maybe it's 62. We're just going to call it 60% out here. The other times, it moves some other expansion level. Sometimes it's a 1.272, maybe it's a 1.618. We know that if 2180 falls and gets taken out, and there's real good chance that that's going to happen. I'm not talking about today and tomorrow. I'm talking about over the course of time. We're now looking at a yearly chart, okay? We're looking at a yearly chart. There's no bears anywhere to be found out here, certainly on a yearly chart. There's no bears on a monthly chart. Here, we'll put up the monthly chart right now. There's no bears on a weekly chart. Here's the monthly chart. Do you see a bearish reversal signal? The answer is, of course not. How about if we go to the weekly chart? Is there anything out here that's a bearish reversal signal? The answer is no. How about if we go to the daily chart? Is there a bearish reversal signal? The answer is no. If there was any kind of bearish reversal signal out here, it was one of those bearish engulfing candles that occurred here on July 21st, just like we did with the NQ. Now we're going to do with the S&P 500. That says the level that you want to be focused on and paying attention to is 2175.63. That is what should be a level of support. If price moves below that, it'll head back to the swing point here from August 2nd, and then we'll just simply evaluate things at that stage out here. And if it falls below that, where will price head back to? Well, I'd say probably right here, this little shooting star. Here's this little shooting star that formed out here on June the 7th, and that's at 2119. But right now, daily, weekly, monthly, yearly, they're all pointing to higher price over time. And in the case of the S&P 500, it's not just the one-to-one that it's going to do. It's 2592. That's its target. This is Steve Rhodes with TFNN. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The question people talk about, markets go up, right? And you want to follow price. We take a look at a number of different factors. Do we look at volume? Of course we do. Can markets go up on light volume? Yes. Do markets pull back on light volume? Yes. They move up and down on high and light volume, so that can't be the only factor that we focus on. Here's a question I pose. How long will markets at least go higher? And the answer is always going to be until at least the first bearish reversal signal shows up, at least. And if you take a look at the NQ off of the bottom out here on June 28th, you can see the markets moved higher all the way up into that bearish engulfing candle on August 2nd. That's why we went ahead and put a line across the top of it, although it was the preceding candle, because it made a little bit of a higher high out there in order to identify a level of resistance. Just because a bearish candle shows up, does that mean you exit your trade? No. This is the market communicating to you and I. It's just like being an athlete. It's like being able to try to do anything in life where you are at a plateau. And the question is going to be, how do you bust through those plateaus? Well, speaking of plateaus, man, was that a smooth segue or what? I didn't even have that planned. But speaking of plateaus, we can switch over to our horizontal trading ranges, right? We can take a look at the guy that used to really do the early morning shows out here, and that was Bud Rolfs. And that, in essence, is, in fact, what we're looking at here, although it's a slightly different system, because I automated Bud's system, which means that I'm looking for the largest number of opens and closes that are in a certain area. Now, this is taking our S&P back to 1994. That largest number of opens and closes, that occurred at 1107.75 as the price point out there inside the S&P 500. But once you can find the 2 or 3 largest number of points out here, then it creates these little horizontal levels of support and resistance. Well, in the S&P 500, that next level, by the way, was 2178.61. Now, we do not use these numbers as exactness. We use these as guidelines, but they're really good guidelines, you have to admit, by looking at it. What does it mean when you bust through another level? Says, I think it was the Eagles that say you take it to the next level, right? Well, that is what happened on Jobs Friday. Whether you like the data or not, whether you believe the market should have gone up or not, the market doesn't really give a rat's patootie. When the market breaks through resistance levels, which it has done as we took a look at it, that says that that ought to be support. That was 2178 going to be support? I don't know, but as long as price stays above this 2178 level, the daily chart says 2255 should be expected. You might say to yourself, how the heck is that even possible? I hear somebody saying that right now. If we look at the weekly chart busted above a significant level of resistance. This was back on July 11th. This says 2210 is its next target out here. That happens to be the midpoint of its horizontal trading ranges. And inside the S&P 500 on a monthly basis, it's got 2192 as a level that could be resistance. So we're going to give more credit to the monthly charts than we do to the daily. The midpoint levels price does not need to stop. Oftentimes it does. So we want to watch the S&P 500 around the 2191 level. But you say, how can this happen? How can this happen? This was preordained before you and I even began looking at the charts this year or last year or the year before. Because here's what we know. We know this for a fact. We know that over the course of 84 years out here, we know that the market makes a bottom in the end of January, beginning of February. When did the market form its bottom this year? That's right. I think it was February 2nd, if I'm not mistaken. The end of January, early February. That's what the market, that's the bottom panel of my screen that you're taking a look at out here. And that's the that is end of January, the top portion of my screen, I should say. The bottom portion of my screen, by the way, that happens to be what we're in right now, which is a presidential election term. You hear all kinds of commentators and all kinds of people, CNBC, they parade these folks out all day long. It frustrates the living you-know-what out of me, because they're sitting here telling us that the policies of this candidate or this candidate are going to tank the markets or this one. Folks, they don't have any control of it. There is a cycle pattern that is in play during an election cycle that says that the market moves down from about September the 9th. That's a beautiful day, by the way. It happens to be my birthday out here. So we'll see if it is September 9th. That would be a nice birthday present. But during a presidential cycle, the market is supposed to find a nice buyable bottom at the end of July. Did we have that here? The answer is yes. We most certainly did. So now we should expect the market to move up and down. I can't tell you how it's going to go. We just took a look at levels, natural levels, where price should move to. We're going to keep our eyes on those levels. But these markets ought to move higher. And if they certainly take out the July top, that'll be the key. And we know that some markets have already done that. That's what says that this bottom panel is likely what is in play out here. Because if it was the normal annual cycle pattern out here, the top would have formed on July 20th, which the Dow has. Right? Has the Dow no, wait. Let me just make sure here. Is the Dow taking out the July 20th high out here? Let me just make sure. Because that chart that you and I were looking at, that happens to be, and I should know this off the top of my head, right? No, it has not taken out the July 20th high. So that's going to be a number you want to watch. You say, what's that number, Steve? Oh, I tell you, it's 18,622. Because if the Dow takes that out, then it's going to be your confirmation to anticipate and expect that prices are going to move higher through the middle of September. Now, we're not going to use September 9th as the day, although sometimes it does happen to the day. And then what happens? This has nothing to do with whoever is polling, however anybody's polling, whatever anybody's belief is, and they're going to tax this and tax that and do this or do that. It's out of their control. There's a cycle that says that the markets move down and form a bottom right around October. So when is it that you're going to want to make your next buy in the market? And it's going to be scary. They're always scary. They're there to scare the living daylights out of you. You might say right now, geez, this is a great market. Look at what Steve's put together. Look at that A to B equals CD. I want in on this market. When should I buy it? If I told you it's going to be sometime between September 25th and October 15th, and I gave you that, and the market really careens down to the downside, what do you think the chances are that you're going to go ahead and buy that? The fear is going to kick in. That false evidence appearing real, by the way. That's going to kick in. You're going to say, oh, it's moving down. I don't know when to buy it. Well, I'll tell you when to buy it. When the patterns form out there and when the cavalry shows up, when the bullish signal, the market will always do that. It'll give us a signal out here. That's why tomorrow's class is so important. So important. No matter what level of trade, if you are brand new, this class is really for you. If you're figuring out, hey, where is it that I want to just simply begin on trading, how about with the way that the market communicates to you every day for every instrument and every time frame? And you just pay attention to what the market is communicating to you. If you do that, you will just simply be light years ahead of anyone else. And stay focused on your time frame. That is for sure. So right now we got the Dow's up 27. We're going to pay attention to that January 20th high because that's just going to give you a nice signal that, hey, what pattern is in play right here? And that doesn't mean that we shouldn't see pullbacks. It just says that the pattern is in play that was preordained. I have nothing to do with that pattern. You've got nothing to do with that pattern. Donald Trump has nothing to do with that pattern. Hillary Clinton has nothing to do with that pattern. And certainly the buffoons that they parade out here in the media have nothing to do with that pattern. That pattern is that pattern. It is what it is. And we don't ignore it. We pay attention to it. Okay. So enough of the soapbox. Not really that it's a soapbox, but I like to make sure that I get my point across very clearly because I'm really doing this not for me. I'm doing this for you. I'm doing this for you. I won't be doing this forever, so I'm doing this for you. So extraordinary tools. I don't know when the next time it is I'm going to do a candlestick workshop out here. Yeah, I really don't. I may never. Might not do another candlestick workshop. So this is the time that you want to get over to the homepage of TFNN. $49. First for extraordinary education, then you got the newsletter service for a month, and way more. If you're looking to grow. If you're not growing, that's right, you're dying. All right, this is Steve-O. You got the Dow up 28 points. S&P is up 2. NASDAQ Composite up 8. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 29, S&P is up 2. This is Steve Rhodes filling in for Larry Pesavento for the morning. Hope you're off to a great start of your day. If we take a look at something that's not off to a great start of its day, it's a stock called Wayfair. W is a ticker symbol. I remember pulling up this chart, somebody asking me for something, and I thought that I had typed in the right symbol, which I didn't, and I had typed in this, the symbol W, and I started doing the technical analysis on it, only to realize that that was not what was the question. And so I just pulled up this. I remember doing the stock. I didn't remember that until I pulled it up this morning. It's a leader, by the way, in the clubhouse to the downside, gapping down. We'll check out the volume. I'll go ahead and add that up to the screen in our profiles. But you see, this is fairly common inside a stock out here. You see this nice little rising trend, nice little lowering trend line out here, created that nice little triangle, nice little wedgie out here, and price just really got down to the apex of that cone before it went ahead and broke out. Now, typically, the move, when you see that, there's a measured move associated with that, and that measured move is really equal to the to kind of like the base. Oh, that's the wrong tool out here. Typically to the base of that move, so really equating to that little yellow box. That still may be the case for Wayfair. I don't know. And then you can just put it right from where it actually breaks out of here, which would give you a price projection of about $56, but not today. That's for sure. Where price is now likely to pull back to, and I'll just draw this line out here first. It's really coming right back to the cone of silence out here, which is about 39.18, right where those two triangles meet out there. That's probably something technically when the two triangles meet, that probably, some technical term for it. Maybe it's apex for all I know. But about 39.18 suggests that that's a level. Let's go ahead and put some volume characteristics on this, and let's go ahead and put our TAS profiles. Whoops, what do I want to do? I can do that a different way. There we go. So we put our TAS boxes out here. We can see that today is a brand new box. That's a dangerous thing. Price right now down to the, looks like the point of control on a weekly basis at 40.36. So if 40.36 doesn't hold, which I doubt that it will, well, let me put the volume on this. You're looking at volume already of 1.7 million shares. That's a big volume day to the downside. So this says 39.18, I would say, and then moving down to the weekly profile low of about 36.19. That is ticker symbol W, Wayfair. I don't know what they do. But it just happened to be a pattern that I originally had come up with. Okay, I had a question out here that asked if I would take a look at gold. It didn't give me the time frame. Really, it's important to understand what time frame it is that we're trading. So I'm going to have to give you multiple time frames to give you an idea of what's going on with gold. First, gold today is up $3.60. No big deal, 13.44. What is it doing? That's really the question, right? So what is it doing? I say if we take a look at this daily chart, we'll start off with a daily chart. Where'd it go? Okay, right here. We'll take actually, we're going to look at both gold and silver. But gold specifically is the upper panel of my screen. Now, I've got the continuous contract up here as we speak. And you can see a nice little rising trend line, which gold, by the way, broke yesterday. It closed below the rising trend line. Now, this is a trend line. Let me get my crosshairs off of the lows out here that I'm using from May 31st. So your touch point, really, the May 31st low. Your next touch point is that big old bullish engulfing candle that occurred on June 26th. So right around there, you can see it's the blue diagonal line, lower left to upper right. You can see that price broke through that yesterday. Now, in essence, the read of this is gold broke its trend. It's at least a short-term trend out here, and it broke through that yesterday. Now, what we like to see, and that's what we're seeing right now today, is was that break real? Was that a real break of the trend line? Because when price gets below it, you like to see it's saying, hey, I don't know. I like that rising trend, and I want to get back into that rising trend. And if it can get above that blue line, it will. And then it's going to find that it's got some resistance right at a price point of about 13.57. That is Stevie's red line out here. So that would be resistance if, in fact, price continues to move higher. Now, in the case of silver, it too broke its trend line, but it did it on Friday. So it's got more room to run to the upside if it's going to try to get back inside its trend line. But it's below Stevie's red line. It is below the trend, and it's below a daily TAS market profile. So that suggests that silver, high-ho silver, by the way, has got some problems out here. Might want to take a rest. Might want to go into the barn here for a while. And if it does go into that barn, you want to be careful because it's going to stay in that barn until about October. And it's only August the 9th out here. So be careful. Look, it doesn't matter to me which side of the trade you're on. Just make sure that you've got stops in place because I can't control the market. I can tell you about the patterns that are forming out here, the way that it ought to be traded. At this stage here, watch for gold. If it rejects this area over the next day or so, stays underneath that trend line, it is giving us a very important message out here. Now, what's going on with regard to Goldilocks on a daily basis? Well, you might think gold or silver, but gold specifically is controlled by buyers and sellers of just gold. And I would say not so fast. I will say that gold is controlled by those that trade the Japanese yen, because that is the bottom portion of my chart. And if you take a look at the candlesticks, just the candlesticks alone, and the movement of the Japanese yen versus that of gold, which is the upper portion of my screen, you're going to think I have the wrong symbol. You're going to say you got the same type of thing. This is the daily chart. I've also got the daily chart. So actually, okay, that's good. I'll put the 30-minute chart out here. I hadn't intended to, but put the daily chart. But with regard to this is good, though, to put it out here. We take a look at the daily chart for the yen futures. You see Stevie's red line. See how the Japanese yen traded a bit higher today? It is trading a bit higher. This is the futures contract right up into Stevie's red line here. So we want to watch that as well. But what I wanted to really do is put a shorter term chart up here, right? Because we have traders of different styles trading different things out here. So let's do that. And I'm going to give something to everybody. I'm going to give some things to the bears, and we're going to go see if some of those divergent patterns are still in play as we come to the end. But take a look. Here's gold right here. Take a look at the bottom portion, which is the 30-minute chart here for the Japanese yen futures. See how this has been moving higher. See how gold had that nice little pop. We'll see if gold is going to hold or if it's just testing a level that used to be support and now may become resistance. So there was also another email out here that said, Steve-O, is there anything that you see that is bearish or short-term bearish in the marketplace? And the answer is there was. Let's go see if that I've been following. And let's go see how it's doing this morning. It's as simple as that. Now I've got to get over to my panel that has these divergent charts. All of these charts that you're now seeing pop up on the screen out here are charts that show me different divergences that when there's no divergence, they're giving you good signals to the upside or the downside. The first one is the chart on the top panel, which is the equal weighted ETF. You guys have who followed me have seen this chart many times. The top portion is the equal weighted ETF, and the bottom portion is just simply the weighted weighted ETF for the Qs out here. By the way, it's QQEW that is the equal weighted ETF. When there's divergences, it is the equal weight that gives us the signal of what is to come. It doesn't give us a signal as to when to take trades. We need other patterns. We need bullish, bearish, reversal signals in order to help us do that. Right now, what we can see, this is at least through yesterday. It's also today. 44.90 is what the QQEW is trading at right now. We can see that it's making a slight declining tops pattern, whereas the normal weighted Qs are moving to higher ground. If this pattern stays out, and what does this say? This says that, you know what, now it is the generals that are doing all the work. It is not the little guys. It is the weighted equities inside the Qs that are moving higher ground. But if we take a look at just weighting each of those 108 equities inside the QQQ, the NDX 100, we got to call it the NDX 108. I believe it's 108 still that are inside that. This is saying, hey, maybe not so fast. And a quick peek at the S&P 500 before we go to this breakout here. We get the same pattern. So there is caution. But all that's saying is a little bit of a retracement. Maybe it's just a short-term retracement out here. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Trade What You See show. If you're expecting Larry Pesavento, he's off for the day. My name is Steve Rhodes. I do the show here from 1 to 2 every afternoon. You can catch the archive of those shows on Channel 9. I've got an extraordinary workshop that's coming up tomorrow evening from 5 to 6. You don't have to worry if you can't be there live because it's archived on your members page. So if you'd like to learn how the market communicates to us, that's one thing, and I'm going to teach you how to do that with regard to Japanese candlesticks. But more important than that, because you can read all kinds of materials about Japanese candlesticks. But what they fail to do is they really fail to teach you how to trade. So Larry's show, what I do, we're all pattern recognition specialists, right? Experts, specialists, whatever term it is that you want to use out there, because the markets are always making these repeatable patterns. And when they form, the question is, how do we know when a pattern completes? How do we know when an A to B equals CD pattern completes? For those of you that trade that, I can tell you that they only make that 1-to-1 60% of the time. Wouldn't you like to understand whether the pattern it's forming is going to be one of those 40%ers? And when it actually gives you the signal to go ahead and trade it, when to buy or sell that D point. Well, if you'd like to do that and you're missing something, you feel like there's something missing in life, or you say, hey, I learned that, I used to do it and it didn't work for me. Well, let me teach you how to make it work. And the way that you make it work is by combining it with Japanese candlestick charting. Steve Nissen's got great books out there, or a great book, 2 great books about Japanese candlesticks. They're a great introduction into what the candles actually mean, but he doesn't teach you how to trade them. That's not what the book is all about. In fact, it was so odd to me that I saw all these wonderful pattern recognition folks that were out there that weren't combining the two. That's what I do. Why do I do that? Because the market talks, walks, and squawks. And Tom's going to be on in a couple minutes. He's going to tell us about how the market's talking, walking, and squawking out there. And if you want to learn the message of the markets, the real secrets out there, the secrets that the masters use, and come on over to the homepage at TFNN.com. Sign up for my newsletter service, which right now you can do it for $49, let alone the extraordinary education that you're going to get tomorrow and the money management piece of it. So I want to see you there tomorrow night. It'll be the best investment that you could make in yourself. Right now, the investments in the market, you got the bulls that are making investments in this market. You've got the Dow moving higher, the S&P moving higher out here. And it looks like I've just been yanked off the air. I knew the show was going to end early. I just wasn't sure when. So, folks, stay tuned. You got a great lineup today. We got Tom who's going to be up next. Then you've got the 8X Hour. Then you've got Basil Chapman, Think or Swim. Then I'll be back with you from 1 to 2. David White from 2 to 3. And Tom O'Brien from 3 to 5. Andy Heck will take it on home. Have a great Tuesday, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.